Today, we're going to be analyzing Alpex Soul Limited's quarter 2 fiscal year 2026 earnings and their future growth plans, a glimpse into their future growth plans. So, let us start. Growth plans. So, right now, we have the company's consolidated financial results for quarter ended September 30th, 2025. So, we will compare this quarter with this quarter. Okay, let us start. First, all these numbers are in lakhs of rupees. Okay, revenues rose. Revenue from operations rose from 18,839.9 lakhs or 188.3 crores to 522.9 crores, a growth of 177.5%. Insane. Expenses, though, total expenses rose from 160.4 crores to 452.4 crores, a growth of 181.9%. So expenses grew a little faster than revenue. Then profit before tax grew from 29.2 crores to 72.3 crores, a growth of 147.4%. And finally, we come to profit after tax growing from 23.7 crores to 52.67 crores, a growth of 122%. So every growth was higher than 100%. Profit growth was a bit less than revenue growth because of higher expense growth. Then let's come to the cash flows. Here we have the cash flows from operating activities for the half year ended 30th September. Half year means quarter 1 plus quarter 2 of fiscal year 2026 combined. And we will compare this to the half year ended 30th September 2024. Okay, let's see. So cash flows from operating activities, we will go to the exact bottom. Yes. So the net cash flow used in operating activities net cash flow used in operating activities turned out to be minus 45.61 crores. So this quarter was not good for cash flows, minus 45.6 crores despite way higher profit growth. Light went out, the light went out. It's all right. Okay. And the last time the cash flows were 26.65 crores. So last time, the first half of fiscal year 2025, cash flows are positive 26.65 crores. This time cash flows are negative. So great earnings, but cash flows were negative. All right. Then let's talk about future growth. Okay. Yes. So all these statements are by Ashwani Sehgal, who's like from the company. These are his statements from their con call. So, first statement. So, next financial year, I want to clarify that all of the company, clarify to all of the investing community and the industry colleagues that the total 3.6 gigawatt of module capacity and 2.2 gigawatt of complete cell and aluminum capacity, everything will be completed in the next full year and everything will be available from the next financial year onwards. So, according to this, I'm understanding from fiscal year 2027 onwards, their complete 3.6 gigawatts of module capacity and 2.2 gigawatts of cell capacity and aluminum capacity will be available from next financial year onwards. And in order to fund all of this, their estimation is that peak debt will not increase 325 or 340 odd crores. So this is the peak debt, the highest debt they're expecting in order to fund all of the operations, in order to get that 3.6 gigawatts of module capacity and 2.2 gigawatts of cell capacity. Then, moving on, the current order book, meaning the orders from customers that they have right now, is 1800 crores of revenue around that. And remember, the fiscal year 2025 revenue was 780 crores. Okay, so 1800 crores worth of orders it already has its order book. Then a question has been asked by an investment analyst to the company, and he will answer. Mr. Ashwani Segal will answer. So, question is, secondly, do you want to revise your target? Because the first half itself, we have close to 900 crores in terms of target, which we are talking about rupees 1,500 crores of guidance we had given, and now would you like to revise that upwards? So he's asking that the full year guidance. So in fiscal year 2025, the revenues were 780 crores. The company is first estimating 1,500 crores of revenue in fiscal year 2026. That is the early guidance. Now the analyst is asking if they would like to raise their guidance because their quarter one and quarter two for fiscal year 2026 were very good. They were great, right? They were great. So would you like to change the guidance? Answer, I do not know. It is prudent to say on this platform how much you will do, but you can take our run rate in the last 2 3 months, and from that, you can make a simple calculation. We are going to exceed the 1,500 guidance by reasonably good margin. So that is a point. All right. So run rate, how much money did you make? Basically, revenue. Revenue. So he's saying that per quarter, every 3 months, you can take the revenue they're doing per quarter and you can multiply that by 4 quarters in order to get the full year revenue. So he's saying that I think they are going to exceed it. So the earlier guidance was 1,500 crores. He's confident, Mr. Ashwini Segal is confident that they are going to exceed it. The earlier guidance of 1,500 crores of revenue this fiscal year. All right. And by a reasonably good margin. That's the point. And moreover, they're expecting that from fiscal year 2027 onwards. We're currently in 2026. Fiscal year 2026, we are currently in that. So fiscal year 2027, they're expecting their EBITDA margin to be around 29 to 30%. Currently, I think it's around 15 to 16%. Yes. If I'm right, you can check this on your own. 15 to 16% is the current EBITDA margin. And with improvements, be it solar cell improvements, all the other kind of improvements incoming, they're expecting 29 to 30% will be their EBITDA margin. So massive increase in revenue expected and massive increase, even a more massive increase in profits because their EBITDA margin, they expect it to increase massively. Then let's move onwards. Oh, my nose is messed up. Then by 2031, they're kind of vague plans, not vague plans, but they kind of, not those concrete plans, but their vision kind of is that they will have a 15 gigawatts of module capacity. That is possible. My nose. So the long-term vision seems to be 15 gigawatts of module capacity by 2031, fiscal year 2027, 3.6 gigawatts is what they're imagining. So again, massive growth, absolutely massive growth. And finally, my nose is about to explode. Their overall guidance given in statement, our original guidance was 2x growth from 780 crores. Okay, so from 780 crores to 1500, 1600 crores, and then from that 3200 crores. So their guidance is to grow 2x like every year. Fiscal year 2025 was 780 crores of revenue. This fiscal year, that is 2026, 1500, 1600 crores, which they have said earlier. Remember the statement that we're going to surpass the 1500 crore guidance by a reasonably good margin. All right. And then from assuming that is 15, 1600 crores, they're going to grow 2x to 3200 crores in fiscal year 2027. So you can see that the company is going for massive earnings growth. That is it. That is Alpex Solar's Concall analysis plus the latest earnings analysis. Let us see how the cash flows will be in the future. As a summary, they believe that by doing a simple calculation, you can see they will surpass the 1500 crore revenue guidance for fiscal year 2026. So breaking guidance, that's a good thing. Cash flows, who knows? And 2x growth, two times earnings, doubling earnings every year. All right. The full on capacity expansion for solar modules, that is panels, and solar cells and aluminium. Aluminium frames are a component used. They are a component in solar modules. Solar cells are also a component in modules. So these are like backward integration. So earlier, if you were to buy, the main thinking is that if you buy cells and you buy aluminum frames from other companies as components, other companies will also have their own profit margins. For simplistic reasons, let's say 10%. Now, if you make them on your own, there's no problem, there's no cost overruns, but you make them on your own, that 10% profit margin, you can absorb it, leading to your increase in your own profit margins. So that's the basic thinking. I believe that's called backward integration. You're going backwards in the supply chain. You're making your own components, raw material kind of. And so massive growth, even faster profit growth, with I think EBITDA margins almost doubling from this to like 15. Let me see. Yep, 16%. 15, 16% is the EBITDA margin. They're expecting this to increase to 31%. I just checked on like screener. So you can see you have sales, you have OPM, operating profit margin. For fiscal year 2025, 780 crores of sales, 16% operating profit margin. So they're expecting this to double. Debt of peak 350 crores. That is it. Bye.